What's up, everybody? Happy Thursday. Let's take a look at some exclusive charts that say that the bottom is in and that the bottom is not in, because a lot of people want to know now, like, is the bottom finally in or not? Well, let's mess around a little bit. Let's see what the best charts and statistics has to say about that, right? First of all, if you have not subscribed to the channel, click. If you have not liked the video yet, click. Done. And if you have one click left, just turn on the bell notification so you don't miss anything that I release, because exciting times are ahead. At a certain point, the bear market is over, and we are coming very close to that. And then you'll notice that everybody steps in, and you are the one that was already there, because you did not stop believing like a lot of people did. And the funny thing is, let me show you this real quick. If we check out this chart, like, how long does the bear market actually last? The green line is where we are right now, the red line is 2015, and the orange line is 2018. And as you can see, when it comes to time, it takes a lot longer than 2018 already, and it almost takes as long as 2015, like 2 weeks, 2-3 weeks, give or take, end of December, and we are actually there. Now, that's if the bottom is not in, right? Because we have made a new low right here on the, what was it? The 9th of November. If that was not the bottom, then this could be the longest bear market ever. But this is the ROI, right? And it's not the lowest so far. So when we look at that, you know, yeah, it's most boring, to put it like that, really. So that's one thing I find very interesting. And another thing is this right here. Like I said, you are the one that is actually here right now, right? Most people are already gone. You see it right here. If we look at the social metrics, right? The red line, you notice that how much that came down. Social metrics was sitting so high, and it's now sitting 3 times as low as it was at the top of the last bull run. Right now, well, not at the top really, but in May. That's where it was the highest, right? So we are sitting 3 times as low. So since then, can we tell that 3 times as much people have lost interest already? So you are already ahead of all those people. You can finally be their exit liquidity instead of you being they can be your exit liquidity instead of you being the exit liquidity of the other people in the last bear market, right? Or in this current bear market. That's what we want, because crypto, it's all about trading, of course, about selling high, buying low. And yeah, if someone buys it like very high from you, that's their problem, right? You're making the right move right here. So we want to know where these levels are, of course, right? Now, what's quite funny is that if you look, this red line is the total risk indicator. And I showed you this before. Shout out to Benjamin Cohen. I subscribed to his dashboard right here. It's a paid version, but I love to show it to you guys so you do not have to pay for it, but get more information. But the funny thing is that in these previous bear markets, you see how low we were, right? Here we were sitting at 0.08. Here, in 2015, we were sitting at 0.01. Here in 2019, we were sitting at 0.015. Now, we are sitting at currently 0.1. So that's a lot higher than where we were in the previous bear markets. But if we turn the social metric off, and the social metric, that is, you know, the amount of YouTube subscribers to big channels, YouTube views, people that follow people on Twitter, all that kind of stuff, right? So how much people are actually still interested and interact with crypto accounts. If we turn that off, look where the red line goes. Go check again. If we turn it on, and if we turn it off. So the thing that's mostly keeping us up is that, you know, people are still there. Like, the price has came down. The price, look, this is everything. But if we turn off the price, it's kind of the same, right? If we turn off the on-chain metrics, it's kind of the same, right? It's not that much higher than what it was in previous cycles. But if we look at social and we turn that off, then we go down a lot. So that has most impact right there, right? So it's mainly that, and when do people give up? Well, people give up when the price gets low. But if we only look at the price metrics, for example, price is, it was already quite near to, like, not really there where we were, but like, for example, in 2015 the price was sitting at 0.023, and here in the first dip we were sitting at, what was the lowest, 0.026. So that's kind of the same. So when it comes to price, we're quite low, right? So people don't give up based on price necessarily this time, right? What makes people give up? Well, it takes too long. The price goes down too much. They don't believe it anymore. In my opinion, this tells me that people now kind of understand that crypto is not going anywhere, right? People now more and more, they have more experience, more knowledge than what they had a couple of years ago, right? And people now understand, like, okay, it's all going to shit, but it will get better. Right? There's still a small group of people that always argues like, no, crypto is now really dead. Yeah, that's the 460th time now, right? Why now? That's not the case, right? So that just stands out to me. And I wonder if we do get this low, because I don't think people are going to give up like they did in this bear market, in this bear market, and in this bear market. I just don't, right? So that's quite funny to see. So there are a couple of very interesting charts right here, and there are some bottom indicators right here as well. And one of these bottom indicators, which is very, very, very accurate so far, is the supply in profit or loss, right? So the orange line is the supply that's in profit, right? So that's now, let me remove the Bitcoin price to make it a little more clear, and the supply in loss as well. So the supply that's sitting in profits right now is 52%. Right? And the supply that is now sitting in loss is sitting at 47%. So that's getting quite high. The funny thing is that if we take these two, this is a mess right now, right? But if you put some moving averages over it, you find something very interesting. If we look at the 7-day simple moving average, in this bear market, and I have to pull up the Bitcoin price for this, Bitcoin bottomed here, bottomed here. That was after that these moving averages crossed, right? If we look at this bear market, Bitcoin price bottomed here. That was after these moving averages crossed. If we look at this bear market, the Bitcoin price bottomed here after these moving averages crossed. Even in a COVID crash, Bitcoin bottomed here, slightly before, but pretty close to where they crossed. All right, now we had our cross again in here, right? They came close, they flirted, they kissed, they did some crazy stuff right there, but they crossed, right? Bitcoin bottomed here. So far, right? And every moving average is different, of course. If we take a look at the 14 days moving average, it crossed as well this time already, right? If we look at the 30-day moving average, which is quite interesting, because in this bear market right here, this is where it gets interesting. 30 days crossed here, October 2011. And we had the Bitcoin bottom in November, right? If we look here, here they crossed October 2014, and we had the bottom in January 2015, so 3 months later. If you look at this bear market, here they crossed in December 2018, and we had the bottom in December 2018. Right now, they finally crossed December 6th. They crossed. Right? So that's a very interesting indicator, because simply every bear market, there was no bottom without these moving averages crossing. Very simple. So as long as they did not cross, the chance that we have seen a bottom is so far zero, right? Because that always happens so far. bad news is that if we look at the 50-day moving average, in this bear market, they crossed. In this bear market, well, you can see they crossed, and in this bear market, they crossed. Here, I don't even have to zoom in. You see that they just not crossed yet, right? So when it comes to that, I hate to break it to you, but this one is, it is an indicator that has to show us that we have to cross right there. We have to cross. And I'm kind of copying and repeating Benjamin's content, what I'm doing right now. But I love this platform. I love the effort that he puts into it. And there is so much information to see right here. And I just need to share it with you guys. Because like I said earlier, not everybody has access to pay $100 or more every month to get this. And maybe the knowledge to read this. I don't know everything here as well. But a lot of the things I do understand. So in that case, I feel like, man, let me just take it. It's good for myself. But I also just want to share it on this channel. Keep that in mind, and I will keep making videos about this, because when they cross, you bet your ass I'll make videos about it, right? Because that's the time that we probably want to discuss, like, okay, the bottom might actually be in. And of course, it could always, you know, that's the thing. You don't want to take this and make this your complete bottom indicator, the only one, right? Because there could be a first time that they cross. The pi cycle bottom indicator was wrong for the first time this year as well, right? So you don't want to base everything on this, right? But this is a very important and so far very accurate indicator. Now, if we look at higher moving averages, for example, the 90 days have not always crossed, didn't cross here. Right? In this bear market they did, and in this bear market they did, right? But it doesn't have to mean that they will cross here, because they simply just didn't right here. We can also make it a, I don't know, a 60-day moving average or whatever. Also, did just not cross right here. So I think that the 50 ones that's crossed, that's most important mainly. Now there are so many charts. These are all bottom indicators, right? This is the total crypto valuation versus trend line. Description: this chart shows the percentage difference from the fair value logarithmic regression line of the total cryptocurrency market capitalization. All right, so the fair value is always 100, right? And every bear market, you see that we go around 37% under fair value, right? Here we did, here we did, here we did, and we are now sitting at 44, right? That's some difference right there. That's quite some difference right there. So also this, it's all getting close. It's all close. And it might be that if we are close, we're just not touching it yet, of course. Because all these charts, they take information from the past, right? But they don't predict anything. That's something you do need to keep in mind. They are not predictions, basically. But you can use them as predictions, but use multiples, right? So the first one that we took a look at, well, the first one with the social metrics and all, it's just not as low as where we were. And like I said, I don't think we are going to get that low, but it's quite higher than where we were, right? So that can come down, in my opinion. The second one, and I just showed you, with the moving averages, supply and profit and loss, 50 days has not crossed yet. Right? So far, they always cross. This indicator right here, when it comes to the fair value, we are sitting quite a bit higher than that we usually are when we bottom. So this one also did not show us that there is a bottom. If we look at the ROI after a cycle peak, so 1 is where we had the all-time high, and that's where all bear markets basically started, right? Again, when it comes to the time, yeah, we are pretty far, but when it comes to the price, I'm not even going to compare it to that one, but when it comes to the price, you see that here we're sitting at a ROI of 0.15, so basically 15%. From the all-time, well, not 15%, but if the all-time high was 100%, then we were sitting at, so if Bitcoin was 100K, then we'll be now sitting at 15K, right? That's basically it. So that was 15, right? 0.15. Here it was 0.16, right? But where we are right now, 0.25. So it's not 17 or maybe 18, but 25. Very big difference, right? Very big difference. So also not showing us that we have bottomed yet, right? Logarithmic regression band does show it. So there are some indicators that show that we haven't, and there are some indicators that show that we had. Logarithmic, God, I am so Dutch. This, look, in every bear market, where do we go? The green bands, right? The lower bands, right? That's where we go into. We stay there for a year or two. And staying there for a year or two is not saying that we go sideways because these bands move up. I explained that earlier in a video. Here we go into it when it was $2.80, and once we came out of it, it was around $23. So that's a big difference, right? I mean, making a 10x while we're still here, not bad, but that's not a bull run, right? But we always there in every bear market. In this bear market, 2015-16, we were there, right? 2018-19, we were there, right? 2022, we are there. We are even slightly below it, right? Quite some below it even, right? So this indicator shows us that we are at the bottom, right? We, like I said, had the pi cycle bottom and top indicator, so it's now on top. This is the pi cycle bottom indicator, and what's quite funny that this vertical line is where the pi cycle bottom flashed, right? And that's quite accurate because here we had the Bitcoin bottom, and the pi cycle bottom indicator flashed like a day before it. So that was kind of perfect, right? In this bear market, we had the bottom, well, right here, right where it flashed, right? But now it's totally different because it flashed back in July. But so far, we made a new lower low in November. So that's half a year difference, right? It's not even a little wrong. It's like completely off, right? And that could be the case because people just, you know, make the argument that technically, you know, price-wise, this was the top. Like, that's very simple to see because here we were higher. But technically, everything showed that this was the top, right? And if the pi cycle bottom takes this one, then it could be correct because this is also half a year difference, right? So makes kind of sense maybe, but this one was wrong when it comes to the price. I mean, that's what we are all been doing it for, right? There's so much bottom indicators right here that show us that the bottom is in and that the bottom is not in yet, right? Historical risk levels. Let me take a look what the historical risk levels are. That's kind of already what we took a look at. So the historical risk levels, this chart shows the risk metric for Bitcoin, the total market cap, Ethereum, and various other altcoins. The purpose, and we can take a look at total market cap, right? Bitcoin, but we can also look at Ethereum, for example, Cardano, BNB, Solana, Link, whatever, right? Let's go for Bitcoin first. The purpose of the risk metrics is not to predict price bottoms nor tops, but rather to identify areas that should be attractive buying or selling points in the long term. And that's what we're doing it for, right? We cannot time the bottom. I'm not going to try to time the bottom with you guys. If I feel like shit, now we are at least very close, that's where I will make very obvious content about that and where I will deploy a lot of money as well, right? So this, let me take a look. This chart could be used for dynamic dollar costing. When risk levels are below 0.5 and close to 0, you can choose to increase your buys. In this way, you will not miss out on setting up a position and you can factor emotion out of trading, right? Below 0.5 and rather all the way to 0. Right now, if we look at previous bear markets, here we were sitting at around, did he really say 0.5? Okay, cool. Here we were sitting at 0.05. Here we were even sitting at 0, right? Here we were at 0.1. COVID crash, we were at, well, 0.13, right? Now we are sitting at 0.2. So yeah, it is below 0.5, like this line right here, this. So yeah, of course, every time you buy under this line right here, you should be fine. Everything under 22K Bitcoin is considered, according to this chart, a good buy for the long term. And I'm pretty sure it is. But there's a big difference in buying at 22K or maybe 12K, of course, right? So very simply, if you do not give a shit about the short term, just like it describes, just buy every month, buy every week, buy whatever you want. You will be fine. Like if you buy now, believe me, bro, in 2 years you will have profits. That at least that's what I think, right? But if you want to make more out of it, then you should not just look at this chart. If you look at the total market cap, we are sitting, you know, that's a different story, because we never went that low, except for one time. We went to 0.07. We went to 0.1. And this time here, we went all the way to 0, right? Now we are sitting quite high though. We're sitting at 0.26, right? So we just saw Bitcoin. So it kind of says like, okay, altcoins are just sitting quite some higher. And that's understandable. If we look at Ethereum, Ethereum is sitting way higher right now, right? ADA is sitting quite low though. BNB's probably, yeah, way higher. Link 0.23, and Solana is all the way down, of course, right? It's sitting at 0.014, right? And you can call me crazy, but I'm a big buyer of Solana right now. I think we have a big discount, so I'm stepping up my Solana game. Hell yes. Is there anything else? Yeah, we got golden crosses and dead crosses. I don't really feel like this is super accurate though. We had a that cross right here, but we first went from $31 Bitcoin all the way to $5 Bitcoin, and then we got the death cross, right? And then we still went from $5 to $2.50. So yeah, okay, but I don't know. I just don't really like this. Like here, the golden cross was very accurate. We had a golden cross right here at $300, and we ran all the way up to 20K. And then we had a dead cross right here at around 8K, and we came all the way down to 3K. So yeah, that was kind of accurate, but I don't know. It's not the chart that I will really go off to. Price colored by... price color coded by risk. All right, so this is quite, this kind of the same as what we just saw, but then it's more to visualize it. The darker blue, the less risk we have in buying, basically, right? And the more red, the more risk we have, right? So if you buy in the red, as you can see right here, the price is so high already, you have so much risk. And when it's dark blue, like here, yeah, then it's like, okay, just buy. And we are now, you know, kind of dark blue, light blue, dark blue, light blue. So overall, yeah, you can really time it a lot better maybe by waiting for the deep blue to come. But we are already kind of there, man. We are already kind of there. If we... it's crashing. Ah, that's so sad. In the middle of the video. Right. If you look at this bear market right here, it was also light blue, and then we had a very clear dark blue area, and then we turned up again, right? That's kind of different than what we have right now, because we go from light to dark, light, dark, light, dark. Like, even the fucking on-chain doesn't make up its mind, right? So how come we? How come we should do that? So... yeah, kind of the half says that the bottom is in and the other half says that the bottom is not in. If it's so hard to tell right now, it tells me a couple of things. One, if there is usually so much a debate whether the bottom is in or not, then the bottom is not in, because the bottom usually comes when people don't talk about it anymore. But I also understand that people, like I said, don't give up on crypto nowadays as that they used to do, and that they maybe have more dedication, and that will change slowly, right? That social metrics don't take off. People will keep on talking about it. So yeah, and I don't know. Also, I think that if we have so much of a discussion, is the bottom in? Is the bottom not in? We're talking all the time about the bottom. Stop trying to time it. Stop trying to time it. Man, like, can we all at least agree that we are... no, if we are not there, that we are at least near... like, you won't regret buying right now. Even if you go all in right now, I wouldn't recommend it, and I'm not doing it. because if Bitcoin crashes to a fucking shit level, I want to buy there. But if you don't care about that, you might as well go all in right now, right? Because I don't think that Bitcoin will never be higher than 17K where we were right now, right? I mean, so far in every cycle, Bitcoin always makes new highs. That's just what Bitcoin does, right? I mean, we made new highs. We had 125x, 123x. We had a 25x. Here we did 22x. Here we had 122x. Like, can we at least say that we're doing it slightly more than what we are right now? I think so. So when it comes to that, that's my opinion on it. I hope it was a little useful for you. If you think so, please like the video. If you have not subscribed to the channel, feel free to do so, and I'll catch you guys tomorrow.